Hi, Torey Eisenman with Benchmark Real Estate Group, and today we're with Brad Siebert from the mortgage firm. And Brad, I have a property management company. We're renting a lot of homes. We're renting from $1,500 to $3,000 a month. A lot of these people probably could be purchasing homes, but they don't really understand how.
Right.
Can you talk a little bit about, at a $250,000 home, $350,000 home, and I know the numbers are going to vary when you put taxes and insurance and such and homeowners association fees, but on average, what would somebody anticipate paying if they were to buy a home as opposed to renting?
Well, depending on taxes, the amount of down payment, and what their credit is, on a $250,000 house, and my payments include taxes, insurance, and if you're putting down less than 20%, mortgage insurance. So you could figure approximately somewhere in the $1,800 range, depending on what it would cost to insure the house or what the taxes are.
Okay, so the last couple first-time home buyers that we sold homes to, it used to be back in the day that if you were buying your first home, you were spending $100,000 and $150,000. Now we're finding first-time home buyers are spending $500,000 to $1 million.
Right.
Right. They've gotten some money, whether they're in the medical industry or the technology industry, and they don't really understand the home buying process at all because they've never purchased a home. It's great, they're making money, God bless you all, but they don't understand that process. So one of the most important things when you're getting ready to purchase a home is to get qualified for a loan. What do they need to do? What do they need to think about to be able to get that loan?
Well, the common question I get is, what am I pre-approved for? And that's one of my least favorite questions, because it's not how much money I can get you. It's what do you want to spend a month?
Right.
And we talk about renting versus owning. I was at lunch the other day, and there were some luxury condos going up, and it was like a one bedroom for $2,000, and two bedroom was almost $3,000.
Yeah.
And we're not talking, 2,000 square feet or anywhere near that. And if you looked at what you could pay at $1,800 for rent or $2,900 for rent in the house and what you would get, you would be surprised. It's probably more house than you really need or want. So the best thing to do is have a number that you're comfortable with, contact a lender that knows what they're doing, and get pre-approved.
Or just contact you.
Or yeah, that would be my favorite.
So to get pre-approved, they need to give you their tax returns, they need to give you income
and bank statements.
And bank statements.
Yeah, I always tell people, if you were lending somebody money, what would you want to know? You'd want to know how their payment history was. Well, that's the credit report. Do they have the ability to pay you back? We get that from their pay stubs and tax returns. And do they have the money to give you for the down payment? That's bank statements. That information right there on 99% of what we do is the information we get.
So let's talk about big fear, because I hear this big fear, even in our industry. If you pull my credit, you're going to damage my credit score.
No. Somebody has to pull your credit. So the first one is going to be what it's going to be. Now, because the system is encouraging you to get multiple offers from lenders, if I pull your credit today and then you go to a different lender tomorrow and they pull your credit, there should not be a hit on your credit because two mortgage companies pulled your credit within a 30-day process. What you don't want to do is, go to these online shops and they just send it out. I've seen 43 credit pulls in a 2-day time period.
Somebody filled out a form online.
Yeah. Or, especially if you're going, when you go to buy a house, you don't want to open up any new debt. If you're thinking about getting a car, get the car after.
Right.
After you buy the house, because all that's going to do is add on to the debt to income ratio, and that could be the difference of getting pre-approved and not.
So when I look at my credit score at Credit Karma or on Chase or Capital One that are all now tracking credit scores, that's not the same as the credit score you're pulling.
No, to me, they give you false hope, and they don't tell you this on TV. There's about 58 different algorithms used to compute credit scores. Only about 6 are used in the mortgage industry, and the Credit Karmas of the world generally don't use those. But it is a good benchmark.
Right.
If your Credit Karma is saying you have 780 scores, chances are you're going to get a good score with us too. If it's saying you have the low 500s, that's when calling us will be the real mark, because it isn't computed differently. And on those type of people, I want to know exactly, not guessing.
Right.
And people call me, well, here's my Credit Karma. I said, well, it's a good benchmark, but it's not very accurate.
So with a lower credit score, that 5 points can swing the pendulum to the you're not qualified, but you don't give up on those people. Or even if they have, maybe they have a 680 score, but a 720 score would maybe reduce the rate a little bit. There's things that you guys can guide them on, and you don't charge for that.
No, when I pull your credit, I know exactly how many points I can increase your score just by maybe altering the amount of payments you have on a certain credit card. So if I pull your credit and you're 5 points from qualifying, and I say, oh, okay, I have the chance to improve your credit by 20 points, I will give you exactly what you need to do to get that 20 points. And let's say, like you said, you were at a 680, but I say, you know what, we can improve your score by 50 points by doing this. And while we're going through the home buying process and the loan approval, before we close the loan, if we get an increased and improved credit, then we would pass on the improvement in interest rate to the client.
So that's really important, I think, for people to understand. So if you're out there renting and you're paying, it doesn't really matter what you're paying right now, because with buying a home, you have that tax write-off. Brad's very willing to look at your credit report, kind of guide you on what to do to get you from that 650 to 720 or whatever is going to benefit you the best. And even if you're not ready to buy today and you want to buy 6 months or a year from now, I always encourage people to call now.
It's better to call now, because especially if you have limited credit, that will give us the 6 months to build your credit to a certain level. And there's a myth out there that if you have no credit, you can't buy. Well, with the mortgage firm, that's not true. Now, it's easier if you have credit. So if you had no credit now and you weren't ready to buy for 6 months, then I could build your credit up and just make the whole process a lot easier for you. But instead of waiting 6 months to start to see where you're at then.
Right. So it's not just about writing the loan. It's truly about educating people and helping them through that process. So if somebody's out there renting today and they're wanting to buy, but they're a little bit nervous, or they know they want to buy, but they really just want to get educated on the process, different loan programs, what can they do? Because there's a ton of different loan programs out there. How do they get a hold of you? How do they reach you to get that information?
Especially going over different loan programs and what you need for down payment and closing costs. I prefer either to have you come in the office and meet face to face, or you can call me at my cell phone at 407-353-3750, or you can simply go online to wearenotthebanks.com, submit a request to be contacted, and we'll get in touch with you.
Great, I appreciate that. Thanks, Brad.
Thank you.